Hello guys and welcome back to the channel. Today I'm going to be talking through why most traders fail and why they fail to be able to remain consistent and turn Forex trading from a side hustle into their full-time career. So the first topic I'm going to discuss is underestimation of the Forex markets. The Forex markets are not as simple as some may think. A lot of the so-called professional traders out there who teach beginner or intermediate level courses fail to remind their traders that the markets aren't built to care about you or your personality or whatever your current situation may be. It doesn't care about that. If you get swallowed up by the markets time after time and begin to lose money, this will begin to play on your mind. But regardless of this, the markets still won't care. You need to understand this from the start so that you've got in the back of your mind, you know there is no point in getting too wound up or emotional over the markets because it won't do anyone any favors and it certainly won't help you. The markets move as they move because of institutions, news events, and other economic data that just is out of your hands. So at the end of the day, you just can't get too wound up because ultimately any market moves are just out of your hands. Now, if you do get too emotional from the start and you start losing trade after trade, then you can begin forcing trades that just simply aren't there and they don't suit your trading plan. But you take them anyway because you took losses and you want to recoup them. The amount of people out there who still can't sit on the hands when required to is quite ridiculous. It's very common that you can experience a week without trading, even perhaps 2 weeks without actually placing a trade or seeing a setup that meets your criteria. But unfortunately, knowing this is one thing and being able to do it is another, and people do struggle with this. Now, obviously, this would lead to unnecessary losses, and when you do eventually get to a point where you hit a profitable trade, you may have taken too many losses beforehand, and the profit is just not enough to outweigh the losses you took previously. Another reason why people force trades is because they see other people executing trades that they can't see during their plan. So they may have experienced a week with no trades, and someone else has just had 2 profitable trades, and they've made, let's say, 8%, for example. You start getting wound up because you can't see these opportunities, and they're making money. What they fail to see is that everyone's plan is different. From trader to trader, there's slight tweaks that are just different, and some will have different factors in their trading plan and other people won't have it. So, 1 week this person you've been comparing your trading to may be profitable, but the next they may lose a couple of trades, and that might be the week that you make profit. And that's just how the Forex markets work and how the whole industry has worked for the duration I've traded for, and I'm sure way before. So if you have a trading plan that is built up on proven data from the past and from forward testing, you must stick to it. I'm sure the plan that you have developed based off of a whole array of data shows that not every day and perhaps not even every week there is a trade. Now, if your data is telling you that, then you need to listen to it and you need to respect it and stay in line with that. This will help you achieve the aim of the trading game, which is to maximize profits and minimize losses. So inconsistency comes in all kinds of forms, but in the Forex markets itself, people struggle to complete simple tasks on a daily basis, such as marking up the daily sessions of the markets and gathering data continuously. If you've had a trade plan built up of the past 6 months and then you trade for 2 months, but you don't record the 2 months of data and overall you've lost money, well, it's because you've not kept up to speed with collecting data as you go along. Win or lose, you need to gather as much data from that as you can to keep the momentum going and to keep you profitable. It's so important because if this is what develops your trade plan, then this is what develops you and your journey as a trader. This is what will allow you to stay on top of your game and allow you to evolve in time with the market's changes. And obviously this isn't the only issue. It's if you take time away from the markets too much. If you've had a month of 20% profits and then you leave the markets for a month and you come back in expecting 20%, but you end up making only 4% and you're really upset about it, well, it's because you've not kept up to date with the market conditions and you've not continued to adapt in line with them. Markets change on a daily basis. They go through all kinds of cycles, and economies across the world are constantly changing, releasing different news figures, different statistics, which are all affect the market conditions. So obviously you take time away, the markets will have changed a lot. It's imperative that you keep track of the markets on a daily basis. You keep doing your markups and you keep gathering data and comparing it. If you've had 5 of the same sort of trade set up and it goes one way and it's a sort of 20% win rate, there's something wrong there. If the same type of trade entry model is only a 20% strike rate but another is 50% strike rate, then you need to just remove the 20% one. But if you don't gather that data, you'll never understand that it's only a 20% strike rate, and you'll just continue making these low probability trades. Like anything in life, you have to be consistent to achieve consistent results. So that pretty much brings our video to an end, and I hope you enjoyed it and it gave you some food for thought. It's definitely imperative that you remain consistent when you're becoming a trader, and consistency doesn't just go for data collection, it also goes for constantly sitting on your hands when you know you should be. Ensure that you don't underestimate the markets at all times, because at the end of the day, even though it won't be the end of your career if you make a few mistakes, it ultimately reflects on your end profit. And if you're trading with big money, if you're funded with, I don't know, $500,000, $500,000, you know, the 1% differences might result in you making a lot of profit. So if you haven't already, be sure to drop a like on this video and subscribe for future videos. They're released on a weekly basis on Saturdays at the moment. Got a lot of content to come out, so be sure to stay tuned, and I'll catch you in the next video.